because once you say digital currency, people say, oh, it's a cryptocurrency. And it's not a cryptocurrency for a couple of reasons. Number one, the whole notion of cryptocurrencies is that they're not issued by anybody. They exist. They can be created or mined or traded or whatever, but there's no central issuing authority that controls the supply. It's a kind of a community based algorithm. So that's one difference. The other difference is central bank digital currencies, at least as they've been announced so far, and a number of them are in existence, or at least 9 or 10 countries that already have them. I'll talk a little bit more about that, but they don't use the blockchain. Now, you could, but they don't. There are reasons for that, and we'll talk about that also. Blockchain technology by itself is nothing new. It's been around since the 80s. The way it was used in Bitcoin, for example, was an innovation, but the blockchain itself is not new. But central bank digital currencies do not use a blockchain. And the third thing, this again is source a lot of confusion. It's still the same old currency in a different form. So a central bank digital dollar is a dollar. Central bank digital yuan in China is a yuan. A central bank digital euro, or Aussie dollar for that matter, is a euro or an Aussie dollar. So it's not a new currency. It is a new payment channel. It is a new way to move the currency around. And as far as digital is concerned, I mean, the last paper treasury bond issue, I think it was 1979, 1980, thereabouts. I mean, so since I'll say 1980, the entire U.S. government securities market, a $25 trillion market with daily turnover in the trillions, has been digital, and message traffic is encrypted. So if you want to say the dollar is a 40-year-old cryptocurrency, I guess you could. So it is digital. That's not really novel. Most of what we do is already digital, even without a central bank digital currency. If you think about your day-to-day life, you get paid, money's wired to your account, you've got bills to pay, you pay them online, use a credit card or a debit card or Venmo or Apple Pay or 100 different channels, et cetera, all of which is digital encrypted message traffic. So none of that is new. But the question is, what is new and why is it such a big deal? And I agree, it is a big deal. For one thing, the ledger, and a ledger is bookkeeping, right? Like who owns it, who has it, I pay you, it comes out of my account, goes to your account, et cetera. The ledger would be maintained either by the central bank itself or finance ministry or some authorized clearinghouse, but authorized by the government. So it's not that's another difference with the blockchain. The blockchain's there. You can go look at it. All this stuff, anonymity is a little overblown. Private, not just private, but government investigators, FBI, intelligence communities love the blockchain because they can deconstruct every transfer that ever happened. Now, finding the name of the person, that's more difficult, and that's a forensic exercise. But once you do, you got everything that person ever did, all kind of laid out for you. So, but this ledger would be maintained by, well, let's just say the central bank, but it could be some authorized agent. So what's I'll just spend a minute on the case for central bank digital currencies. Why do they say they're a good thing? And it kind of goes, I can illustrate this with a very simple example. So let's say I'm in an airport, I go to a newsstand, I buy a book, and I pay for it with my credit card. So I get the book and the merchant brings it up on the credit card. Well, what does the merchant do with that receivable? Well, there's a finance intermediary out there. They're called merchant acquirers. And what they do is they buy these receivables from, it could be thousands or more of retailers. They pay the retailer the money and then they own that receivable. They then bundle them in large amounts and they deliver them to MasterCard or Visa, who are the issuers of the credit cards. And then, should say the sponsors of the credit cards. So MasterCard then pays the merchant acquirer. So what does MasterCard do? Well, they then take these receivables and they deliver them to the banks that issue the credit cards, and there are thousands of banks, and all those banks pay MasterCard. And then step 5, the bank sends me a bill and I pay the bill. But think about that. You've got the customer the retailer, the merchant acquirer, MasterCard, Visa, and the bank. You've got 5 intermediaries charging between 2 and 3%, close to 3% fees in a very clunky, multi-tiered, redundant and expensive and slow payment process. What if we had a central bank digital currency and I actually had an account at the Fed on my iPhone or your Samsung or whatever device you use, and so did you, and I wanted to pay you. It's like Venmo. I send it and it shows up, but it just goes through the Fed. The Fed debits my account, credits your account, done. No intermediaries, no merchant acquirers, no credit cards, no banks, and no fees. So they would say it's better, faster, cheaper. Now, I've raised the question in the past, couldn't you intermediate the entire commercial banking sector if you did this? I mean, who needs banks anymore? And the answer is theoretically you could. That won't happen because people lose sight of the fact that central banks, say, what do central banks actually do? They say, well, they're there to control inflation and stimulate the economy and create jobs. And now they're supposed to be the police for the Green New Scam, make sure nobody lends money to an oil company, et cetera. And they do all those things, but the real purpose is to bail out banks. Bankers are dumb. They screw up the entire world every 10 years on a pretty regular basis. And after Pierpont Morgan died, they said, who else is going to bail us out? Well, we'll create a central bank. At least that's how it played out in the United States. So, since central banks' real job is to bail out banks, they're not going to destroy banks. However, this whole business could go away. It could be greatly simplified. So they would say, again, easier, faster, cheaper, safer. What's not to like? There's a lot not to like, but we'll get to that next. But that's kind of the idea. Now, there's a corollary to this. Before I kind of continue the conversation on central bank digital currencies, there's a corollary, which is if you don't like central bank digital currencies and what they can do with them, okay, you can always go to cash. Just get out of the bank and get whatever, $5,000, $100,000 in cash or however much you like. Easier said than done, by the way. It's perfectly legal. I'm not talking about money laundering or anything illegal. To say, hey, it's my money, give it to me in the form of cash, at least in the United States. I guess it's the same in Australia. They'll look at you funny. They'll tell you to come back, make an appointment and come back because they don't have that much cash on hand. You'll have to bring, probably multiple character witnesses and your birth certificate and who knows what else in order to get the money. And then, at least again, in the United States, they send a report called a currency transaction report to an organization called the Financial Crimes Enforcement Network, or FinCEN. Notice the word crime right in the middle, and you'll go in a file next to like Ayman al-Zawahiri. So that's not as practical as it sounds, but at least it's theoretically possible. So they have to get rid of cash. In other words, allowing alternatives to the digital payment system kind of defeats the purpose of the digital payment system. Again, I'll come back to the nefarious and hidden purposes, or not so hidden. So they have to get rid of cash also. So the whole move towards central bank digital currencies, which has got ahead of steam, is running in parallel with the elimination of cash. So don't lose sight of that, because there's a very strong movement around the world, of which Australia is a part, the United States is certainly part, to eliminate cash. In the U.S., we have a $100 bill. That's our largest denomination. When I was a teenager, we actually, the U.S. had a $500 bill, and they were in circulation. You could get them. So they eliminated that in 1968. No more $500 bill, and from then on, the $100 bill was the largest denomination. But the difference between then and now is that in 1968, a $100 bill was worth $100. If you adjust for inflation, the $100 bill of 1968 is worth about $20 in purchasing power in today's money. So we're already at a point where our largest denomination is worth $20 in purchasing power, at least compared to the 60s, $100 nominally, but it's greatly shrunk. So we don't have much cash. By the way, if you want $1 million in $100 bills, that's 10,000 bills. It weighs exactly 22 pounds, and it fits in an attaché case, $1 million in $100 bills. people look at me funny. They go, Jim, how come you know that? Well, first of all, I do know that, but it's really just a math problem because one bill, whether it's a 1 or 100, but I'm using hundreds because the biggest weighs a gram. So it's basically 10 grams or 10 kilograms, 10 kilos or 22.2 pounds. So, but the point being, we're very far down the road to get them into cash anyway, but you can still do it. You can get your 22 pounds and have your $1 million in cash. So why are they so driven to eliminate cash? What's that got to do with central bank digital currency? Well, now we get into the purpose of the central bank digital currency. And the metaphor I've used is that if you want to slaughter pigs, you have to get all the pigs into a cattle chute and run them into the slaughterhouse and then slaughter them. You can't just let them, run around. You got to herd them up and get them into a cattle chute or cows for that matter. And so if they want to slaughter savers and investors, they have to get you into a digital slaughterhouse. And that's what digital money is all about. If you can't have cash and you can only have the central bank digital currency, then everyone's got to have a digital account. And once they've got you in the system, of course, they know who you are because it's all digital and they keep the ledger, back to the ledger. What can they do? Well, they can impose negative interest rates. So you have $100,000 at 1% interest. You go away for a year, you come back, you should have $101,000. But with a negative interest rate of 1%, you go away, come back in a year, and you'd have $99,000. Well, cash isn't an easy way around that. At least you can bury it in your backyard, but at least you'd have the $100,000 in my example a year later. But with a digital account, they can actually take it out of your account. Number one. Number two, they can put a timestamp or an expiration date on your money and say, okay, here's your money that's in your account, but if you don't spend 10% of it in the next 30 days, we're going to impose a 2% penalty. We're going to take it away basically if you don't spend it. Oh, what does that do? It kind of forces you to spend it. Is that a kind of stimulus? Maybe, I'm not sure. These things don't usually work out as the eggheads plan, but the idea would be if we don't have enough what Keynes called aggregate demand, we'll force people to go buy stuff by telling them if you don't spend it, you lose it, use it or lose it kind of thing. Okay. Withholding taxes. Now, again, in the United States, I think it's similar in Australia. If you have a job, quote unquote, your regular payday or whatever, they pay you, but they deduct the withholding tax at the source, and it's based on the rate. So maybe it's, 20%. So you make $1,000, they take out $200, and here's the $800 net to you. And then at the end of the year, they give you a statement, and you file your tax return, and you claim the withholding, and you reconcile your taxes. But that's not true for independent contractors, doctors, lawyers, professionals, writers, anyone who you earn a living, you work, right? But you don't have any withholding tax, but you still have the money still goes in your bank account. Well, now they can just impose the tax on your bank account. Say, well, hey, we see your inflows here. You make a nice living. We're going to take 20% of that. Again, we'll send you a receipt, tax receipt, and file your tax return and sort it out at the end of the year. That would come as a shock to a lot of doctors and lawyers. So negative interest rates and withholding taxes are two things that are hard to impose if in a world of cash and non-central bank digital currencies, but they're easy in a world of no cash and central bank digital currencies. It gets worse. I know in promotions you offer the client a few things. You say, but wait, there's more. Well, it gets worse. For example, this is the culmination. I'm just kind of cut to the chase. This is the culmination of the total surveillance state. Now, we already have facial recognition software. Very good. It's like your face is like a fingerprint. Everyone's a little different. You say, well, that's okay. I'm going to put a mask on because COVID, and sunglasses, and pull a hat down to my forehead. You'll never see my face. You know what? They have gait recognition software, GAIT, meaning how you walk. Everybody walks differently. It was that Monty Python thing, the mystery of silly walks? Well, silly or not, everybody walks differently. And so they can actually digitally identify you just by the way you walk. And so your mask isn't going to help you. And you know, with GPS, I have a bunch of what are called Faraday sacks. They're you know, some of them are nice. I'm glad they're wallets, but they're basically lined with a certain metallic fibers that block radiation. So if you want to turn your cell phone off, put it in a Faraday sack, and by the way, do the same with your Easy Pass and any other things sending out, you know, radiation, which are ubiquitous. Maybe they can't follow you around, but most people don't do that, and they do. And so with your iPhone, they know where you are at all times. You may be looking at a map trying to find a good restaurant, but they're tracking you. Pardon me. So they already do that. But now they take a step further. So you're at the point of purchase, you're buying a book. And let's say it's a book that criticizes Kevin Rudd, for example. He's your leading panda hugger down in Australia, or in the United States, criticizes Joe Biden or something, or, you know, I'm ultra MAGA hamburger, whatever it is. Well, oh, gee, ultra MAGA, you're an extremist, you're a radical, you're part of the insurrection. So now we're going to freeze your account, or deny the purchase, or put you on a watch list, or we just appropriated money to hire 87,000 armed IRS, Internal Revenue Service agents. Maybe we'll assign one to you because you bought the wrong book. So now we're into thought control. We're into basically subduing your political enemies, because you know, well, if you give money to a certain candidate, political candidate, again, perfectly legal stuff, buy a book, make a donation, that's legal, but they don't like who you're doing it with. And they meaning the government, and they're watching. So total surveillance. They know what you're reading, and by inference, what you're thinking, who you're giving money to, what causes you support, et cetera, et cetera. And it doesn't take much these days to have some, you know, kind of low IQ spokesperson at the White House label you as an extremist. So this is all government's ever wanted, was total control of the people. You know, makes Louis XIV look like a very hands-off kind of guy.
But Jim, the government would never do these things. You know, the tax office would never target, you know, a political group. You know, they would never target a group of people because of donations to different causes. They would never target protesters in any way. They would never target someone who's doesn't want to get vaccinated in any way. None of these things would ever happen.
Well, I know you're being actually very serious, but I know that's more rhetorical. The fact is, not only will they happen, they have happened, they are happening. This is the world we live in. That's absolutely the case. And let me give some concrete examples, because I don't put stuff like that out there without backing up. So in 2010, so this is now 11 years ago or 12 years ago, the IRS targeted what we call in the United States the Tea Party movement. This was the first midterm of President Obama's first term in office. Historically, a time when the president's party loses a lot of seats. It's not even Democrats versus Republicans. It's just a consistent pattern of first term president, first midterm election, they lose seats. Obama lost almost a record number of seats, something like 63 or 64 seats versus an historical average closer to 30. Even in that first midterm election, not all elections. Because of people were upset about Obamacare, they were upset about the tax increases, the bailouts coming out of the 2008 global financial crisis favored the rich, hurt the poor. There was just a lot of people were having second thoughts about voting for Obama in the first place. So we had this Tea Party movement, and they just kicked butt in the 2010 election. Well, so these were springing up everywhere. This was a genuine grassroots movement. There was no like nationwide top-down organization. Communities were like, hey, let's start our own branch of the Tea Party, et cetera. And because they were, they qualified as nonprofit organizations. There's some rules around that, but you have to apply to the IRS, our Internal Revenue Service, for a designation and a number proving that you're a nonprofit organization. Well, the person in charge of this was slow rolling all the applications. They weren't getting approved. They were entitled to it. That the IRS intervened to squash the formation of Tea Party movements from coast to coast for political reasons, plain and simple. Well, that was 12 years ago, and there was no central bank digital currency. Imagine how much more powerful that kind of corruption is today. I was in Canada. I was up there for an extended period of time during the Freedom Convoy in January of 2022. And, so, okay, they blocked traffic in Ottawa. I was just in Ottawa last weekend. It's a pretty city, but it's kind of small. And they surrounded the Parliament Hill, or whatever they call it, the Parliament buildings. So they blocked traffic. They blew their horns at 3 a.m. All Trudeau had to do was come out, say, hey, get your leaders together, get 20 people, let's talk, let's hear your demands, make a few concessions, everybody go home, call it a day. He didn't. Trudeau is a coward. He ran to his basement, locked himself away. The hatchet man or hatchet woman, I guess, is Chrystia Freeland. I know her for better or worse. She's the Deputy Prime Minister of Canada and also the Finance Minister. She called the banks. The thing about Canada, I think it is similar to Australia, US very different. There are only like 5 banks in Canada. I mean, there's some small ones, but it's RBC, Bank of Nova Scotia, Commercial, Canadian Imperial Bank, TD Bank, and Bank of Montreal. Called the banks, got the accounts of the truckers, froze the accounts, then called the crypto exchanges, and there were not that many of those, got their crypto wallets, so froze their crypto wallets, seized their trucks, froze their accounts, held them in jail without bail, delayed hearings, and they couldn't feed their families. This was during a very cold winter in Canada. So if Chrystia Freeland can go that neo-fascist with a couple of phone calls, she wouldn't even have to make the phone calls with a central bank digital currency. They could just do it themselves. So as a tool of totalitarianism, as a tool of surveillance, as a way to tax, seize, freeze accounts. I always tell people, if you put money in a bank, it's not your money anymore, it's the bank's money. Well, now make that the government's money, because the governments can operate through the banks. So that's what they're all about. They have it in China. It's just an extension of the social credit system. I think people know what that is, where they keep score your whole life. And if you smoke or, post a meme of Winnie the Pooh, because Chairman Xi looks like Winnie the Pooh, that's probably enough to get you a very low social credit score. And then now they'll just use the central bank digital currencies. Bahamas has one. I'm not sure they're organized enough to be totalitarian, but they have one. A few other countries do. The U.S. was taking its time. China had it, got it. They rolled it out during the 2022 Winter Olympics in Beijing. Europe is moving pretty quickly in that direction. And the U.S. was studying it. We had a joint research project between the Fed and MIT. They wanted to take their time. That changed. Recently, Joe Biden signed an executive order, and he basically put the pedal to the metal, accelerated this. So the U.S. not only does not want to be left behind, but the U.S. is saying, hey, maybe we better get out ahead of the parade, take the lead here. So it does have those kinds of consequences.